Good evening. Welcome to Options Tenor. It is Monday, 12/12/22. Welcome, everybody. I am back full time now. As of tonight, I am done with my project, so you'll see so much more of me on Instagram, Twitter, TikTok, the Options Guy, the Discord. All that's in the description. If you're new here, go down to that bottom right-hand corner, hit that Options Tenor logo, the OT, and subscribe. Make sure you like these videos. It helps out to get these videos to a bunch of people. We're going to go through ES on multiple time frames as usual, and then we're going to add on a little bit of extra here today because the VIX was up, the market was up. What the heck is happening? Well, I'll tell you. All right, starting off with ES on the monthly. Let's gather in here a little closer. Okay, on this monthly time frame, you notice we talked about this range extensively. We back tested this range. Well, that's all we're doing again. It's the same thing over and over. You know, this is the 8-month moving average, the EMA. We are trending down. We're underneath that. We came to the 50-month, bounced off hard, and we're back testing that area once again. That's why I extended it out. So we get back into this area and we start closing. All right, we're looking at a little bit more bullish scenario, but we're right at that neutral mark. We're closing right on that 8 EMA, and that's because of the information that's coming out tomorrow and the FOMC Wednesday. All sorts of things happening this week. We have VIX and options expiration, the triple witch, quadruple witch, all those things. Where are we going to result at the end of here? I am biased. I'm biased to the downside. We've been talking about these targets from this 3,500 area to the 3,200 area here. All right. I want to test the bottom of this channel. And then this is what I think is going to be more of a midline to the channel, and then we're going to have the next channel bottom for a full-size channel down here at the 200-month moving average. So I think we're going to test here and then continue to the downside all the way down to 2,200. That's my ultimate target at this point. Okay. The MACD is down. It's kind of getting to that neutral area where it's moving sideways, waiting for its next move, whether it be up or down. RSI is right in the neutral area as well. So let's move on to the weekly. Okay, traders, on this weekly time frame, we had this huge ascending bearish rising wedge, broke down from it, have been making lower highs and lower lows ever since. Came down to the 200-week moving average. Also, this great support area, if you noticed, where we ping-ponged back and forth over here. We bounced off of that pretty hard at that 3,500 area. So I do suspect we retest and break to go into this area. That's just a projection. We're not in the business of projecting. We're in the business of trading. So, you know, we don't just blindly put on trades for this type of move. We are above the 20 and the 8 EMA here on the on ES on the weekly. So, you know, we're in a bullish posture. Perhaps on the lower time frame, I'm going to show you something a little bit different, a bear point of view. But you see this downtrend line? We break that downtrend line. We close above it, especially on the week. And I think we're in a bullish scenario. I'll have to change my mind frame. And I don't think that's the case, but you have to keep that in mind anyway, especially since we had this bullish divergence on the weekly time frame that's starting to play out. I don't think that's going to hold. We are backtesting. We're coming back to the neutral area. We're also neutral in the RSI as well. Kind of a resistance point in these last two moves to the upside. You know, that's just something to observe there. And I think we could possibly head lower from here as soon as tomorrow morning. Okay, so let's move on to the daily. Daily trend is our friend. All right, what do we got going on here? Okay, in this, I have a channel here. You can make a wedge as well, but with this channel, we had an A, B, C move up here right into supply. Also, this downtrend line, we broke down from there, broke the channel support, and are back testing right at this time. We're back testing not only this 4,000 most important area that we're oscillating through for, my gosh, since May. Yeah, it looks like since May we've been oscillating. But even if you look on the bigger time frame, it was way before that. So this 4,000 is very important. And now we're back testing the 4,000, the 200-day moving average, and also the channel support. This is a bearish setup in my mind. If we start breaking above here and regaining the support, regaining the 200, then we're going to have to switch over. That's what we do as traders. We're going to have to switch our movement there. But I am positioned to the downside. And what's really awkward here, I'm not going to, before I go to the 65-minute, we're going to go over to the VIX. But before I go down there, I want to say I put on today, I put on call protection. Okay, so we're headed in my options account. We're fully on the put side with 385 puts for Monday expiration. Okay, so I put on a bunch of those, and we also added, because we thought we were going to bounce a little bit higher today, and we did. We actually got a nice push at the end of the day, but I put on some 410 call protection. Okay, everybody uses the word put protection. Well, in this case, call protection. And what's funny is that the market went up, and typically you'd start to lose money on this curve, you know, and you'd have to have huge moves before those calls actually started making money in your overall account. Well, my account went higher as price went higher, and that's because of the VIX. The VIX was going higher as well. So if we notice over here, there's all the alert indicators. The VIX futures is up. The dollar, which has been a hedge, has been up. The TNX, which is rates, the rates are up. So which is a very bearish signal. Where the skew is going up. We're at 119 right now, which means you know, people are hedging with out of the money puts. VVIX up. VXN for the NASDAQ is up. VVIX is the volatility of the volatility index. And VIX is massively up. And that's what we're really looking at, because the VIX is bringing options premium up, and which is, you know, as calls are going up, of course their premium is going up because we're getting closer to near the money. But also, the puts are not depleting because the premium's actually raising because of the VIX is raising, and so that's you're in the situation where you know, price, usually when price goes up, the VIX goes down, and so you're losing it's kind of sucking out the Vega. Would be the answer to that. You're losing Vega if you're into the Greeks, and so it's a little bit harder to make money on the upside. You don't think you're going to make as much as usual, but while price is going down with puts, you also gain premium with the VIX going up as well. So that's why puts are so important, and they make very good protection on the market, and you can buy them cheap. Well, calls are cheap right now, and they're actually getting more expensive as they're going up, and puts are still getting more expensive as price is going up too. So I hope that's a mouthful, but all in all, what that says is it's untypical that my account is going up with call protection. All right, so we see the VIX here. VIX is going nuts, gapped up, and is moving. We are triangulating in this. We came down, threatened to break through, regain. That's a fake break. Now I think we break out. I think that's what that signals. I think that's what's happening. I think we're going to move much higher, possibly to test even the Corona crash highs here on the VIX. I know that seems far-fetched, but that's a big move. And so we're going to play it. We are in a couple UVIXy calls, but it did not accelerate because it doesn't follow the actual VIX index. What it follows is VIX futures, and you see we're just slightly up on VIX futures, but that may change as soon as tomorrow. So that's just something I want to point out there. The VIX is very important. It's been going down. It's been trending down for quite some time. And when it starts to move, it doesn't really move sideways too much. I know this all looks like a big sideways move, but it just kind of trends down and then breaks and trends up and then trends down. And if we go down now, we're ready to go down to 65-minute. We'll start off with the VIX and we'll go back over to the ES, which is the S&P futures. So we have an inverse head and shoulder setup here on the VIX, and that's why we took the UVIXy trade as well. And then you have your neckline right here that we're looking at. So we start to get above and break above this 23.20, really kind of the 23 area of the zone. We start breaking above that in the morning at 8:30 with CPI. If that comes in hot, we are probably going to see a big move here. And then following should be FOMC, which is just exacerbate whatever this CPI does. If it comes underneath, then the CPI, then price action should probably move to the upside, and we'll break that downtrend. And Powell will probably make that move even bigger. So if we're moving up in the VIX and down in the market because of CPI, then I don't think Powell is going to save that. I think he's going to make it worse. And that goes both ways. Okay, so there's our setup, our inverse head and shoulders on the VIX. If we broke out from that trend line, I don't know if you noticed that channel. It broke out from there as well. Okay, and so also you see this big wedge. We broke down from that. That was a 2-month move to the upside. I think that upside is over. We broke down and we are back testing. That's all. That's simply a back test to this wedge. And so we're watching that for the morning. We're prepared. We have all of our positions set. I am out on futures, but I will be trading futures in the morning, and we'll be ready to go for CPI possible catalyst. Okay. Anything else? We have the week outlined here from last week. So we see where we come from here. But where do we go if we actually break out from price action moving to the upside in a bullish way? We have a long way to go. It's probably going to be vicious. If you notice last CPI, we had a 200-point move. I don't suspect this will be any different. So if we're moving 200 points from tomorrow, let's just say from this 4,000 area, we could be looking straight out to this 4,200, 4,221 destination. And so we're in those 410 calls. We would make a killing off of a huge move to the upside as well. But we are biased to the downside with those 485 puts for Monday, just to allow one more day for follow through. If we do break down, we're not only going to get to this options expected move, which is the 3811, but I do think we're going to break down, 200 points or even more within a few days, possibly 300 points. And that's such a huge move, a 3 deviation move to the downside. But I think we're primed for it. I think this is, if we do go to the downside, I think it's going to be a massive possible move. And I think the destination is that 3750 area would be our first primary spot that we test, and that's 250 points away from just this area. And why am I looking at that? If I think I showed this on the weekend video that I did. Just go to the trade tab on the SPX, and you can also go to SPY. That will show you some of the the points where we'll be at. But if you go to the SPX and you go to the trade tab, and then you just check out some of the expiration moves, because this is the options expiration and futures expiration and all sorts of things, but options expiration on the month. Sorry about waiting for the data here. I can pause the video until it pops up. All right, that magical pause button. So we're at the December 16 expiration. We're at the AM expiration because that's where all the action is. And if you notice at the 4,000 mark, we have a massive amount of options open interest, and that's 160, and then 160 on that side too. So we're looking at 300,000 contracts. That's massive, and that's why we've been stuck on this area. Well, let's expand this a little bit more. Let's go 300 strikes out, and we're looking at if we're going to the downside. We see 60,000 here. That's a 3,600. We see 40,000 notable. Well, 3,700 area, we have 90,000 and almost 70,000 contracts. It's nearly 160 or so thousand contracts. That's not too shabby. And so I could see price just simply floating to that point if we get enough catalyst acceleration there. There's not much in between. You kind of see that 3,900 area has a nice little hit on it, but just not quite there. And there's nothing else in between there that has that kind of volume. Now you get back to the 4,000. Now look on the call area. Sure, 40, 50, kind of hanging around. Nothing notable, nothing. And so there's no real attraction. The 4,200 area has 44,000. Nothing significant. We're really, really looking to that little caveat to the downside, to the 3,700 direction, the price point. So that's why I'm looking at that. If we go back to ES, let's head back over there. I had to reset my computer, so it's kind of taking a little bit of time to get all the data and everything. Probably because this is still loading up. So we'll go back to the charts. And the last thing I'll show, we're not going to get into too much detail, anything else right now. There we go. Just want to start it back up. Sorry, this video is taking a little bit longer, but we have a lot of information, and we want to go to this Elliott wave. And notice right where we landed today. So we had this nice impulsive move to the downside. I think this is a 1, 2, 3, 4, and a long 5, extended 5 there. And then I believe we have our A, B, C correction right into the golden zone, and that's where it's setting us up to go lower. Okay, I put all these Elliott wave projections on my Patreon. If you're interested, there's going to be much more information on there coming up into the future. But thanks for joining us here. Don't forget to like the videos. Once again, that helps out extremely. I'm super grateful for you watching the video. And thanks for joining us here at Options Center. Have a wonderful day, and we'll see you tomorrow.